people are pretty aware of the iconic Proposition 13, which passed back in 1978. This was a time when property taxes in California were out of control, so people voted for Prop 13 to limit property taxes, and it also had some other protections about other kinds of taxes, like a 2/3 vote for special taxes. So in the 40 years or more than that, since Proposition 13 passed in 1978, the courts and the legislature have eroded Prop 13 very significantly. A series of court decisions has weakened it. More recently, just a few years ago, there was a decision that weakened the 2/3 vote requirement for special taxes. This was a case called the Upland case. Well, that's kind of the straw that broke the camel's back. We need to close those loopholes in Proposition 13. California taxation is out of control. We have the highest income tax rate in America, 14.4%. We have the highest state sales tax rate in America. We have the highest gas tax in America. And people are leaving. People are leaving California, as you know, because your station has done a special on the exodus out of California. It's the high tax and high regulatory burden that has forced people out of the state. We have worked very hard to draft this new piece of legislation. It's an amendment to the state constitution. It's called the Taxpayer Protection and Government Accountability Act. We drafted it, we along with our allies, and we had a lot of people look at it. We went through many different drafts to make sure that it's well written. Constitutional drafting is not easy, and so we worked very hard to make sure we had a quality product that would provide California taxpayers with a level of protection to which they are entitled. The Taxpayer Protection and Government Accountability Act is really a major step for California voters to reclaim some of the rights that they lost by some of these court decisions. It really has four major parts. Number one, there's a transparency element to it. If there is a ballot measure or something put on the ballot by the legislature or a local government that raises a tax or a fee, the ballot label has to say it. It says raises a tax or fee. This is basic transparency, right? So it has that. It also clarifies the rules about voter approval for fees versus taxes. One of the ways government's gotten around the voter approval requirements for taxes is by calling it a fee. Well, it's not a tax, it's a fee. You know, it's just a label. So we make sure that something that is a tax is subjected to the voter approval requirements that it should be subject to. We also have a provision in there that prohibits administrative agencies from raising taxes. Because when administrative agencies raise a tax, the politicians always say, it wasn't me who raised the tax, it was this administrative agency over here. What we say is if there's an increase in a tax or fee, it has to be approved by some elected legislative body. The legislature of the state of California, Board of Supervisors, a city council. They can no longer dodge political accountability. They have to vote yes or no on a tax increase or a fee increase. So that way, when somebody says, where did this tax come from? We can say, those are the people that voted for it. These are the people that voted against it. So it has accountability provisions. And of course, one of the most popular provisions of the Taxpayer Protection Act is the provision that said, even if the legislature raises a state tax, like it did with the gas tax, it still has to be ratified by the voters in a statewide election. What was the most unpopular statewide tax recently? The gas tax. Remember how controversial that was? If that tax had been subjected to voter approval, voters they would have rejected it overwhelmingly. We are giving voters of the state of California the final say on a statewide tax increase. Now, what does the Taxpayer Protection Act not do? It doesn't raise any tax. I mean, the other side is claiming this is going to be the end of Western civilization if this thing passes. They're saying the world will come to an end. In fact, they've sued to try to take it off the ballot. We have responded in saying, it's not that radical. It's just about accountability. the ability of the people who pay the taxes and pay the fees that have an opportunity to say yes or no on that, because California, we're already overtaxed. So it's very straightforward, and I think one of the reasons that the legislature and the governor filed a lawsuit to take it off the ballot is because they've seen the same polling we have. If this thing is on the ballot, it's already qualified for the November ballot, it will pass. I think that people have had it in California with our high taxes. We're not anti-tax, we just want accountability and we want some control over how much we pay. Well, it works pretty simply. Those four elements that I just mentioned, it requires, for example, if a city wants to raise a fee, all right? They say we want to raise a fee for some specific purpose, and they want to put on the ballot label that this is essential for governmental services, but it doesn't say fee or doesn't say tax. The Government Accountability, the Taxpayer Protection Act says if it raises a tax, it's got to say so on the ballot. So these four elements of this, you know, the transparency, the prohibition against delegating to some administrative agent, the requirement that measures be put before the voters, these are substantive provisions that will be placed in the state constitution. This is a constitutional amendment. It beefs up and protects and reinforces Proposition 13 and some of the other laws that we've passed over the several years to give taxpayers control. Taxpayers in the state of California need more control over government because right now we have one-party rule in this state. And the special interests, mostly the public sector labor organizations and all the people who live off government revenue, they are very, very powerful in California. And the Taxpayer Protection Act kind of levels the playing field to give taxpayers equal voice in how government operates in the state. Since 1978, the law has been very clear that if there is a local tax for a special purpose, like a sales tax for transportation or a hotel tax for trying to help the tourist industry, if there's any kind of tax for a specific purpose, the Constitution, Prop 13, requires that a special tax receive a 2/3 vote of the local electorate from a city or a county. The California Supreme Court, in a poorly written decision, implied that if a tax is put on the ballot by an initiative, a local initiative, a special interest like a labor union, if they put something on the ballot that raises a tax, then the 2/3 vote doesn't apply. And that implication ran directly contrary to very well established previous case law. Well, we suggested to the court, well, if you rule this way, it's just going to open the floodgates for all kinds of taxes that did not get a 2/3 vote. Sure enough, there's about 20 taxes out there that this loophole has been exploited. Local governments putting a tax on the ballot, and it's been being sponsored by some citizens group. In many instances, the citizens group is the Board of Supervisors itself. You know, it's like, oh, it's not us that's doing it. We went out and we got the signatures and we qualified it along with our buddies who stand to benefit from this, and we've qualified it, and they do it all to avoid the constitutionally mandated voter threshold. So we said, okay, time out. We're going to go back and we're going to reinstate the powerful 2/3 vote protection for special taxes. The major tax, there was one tax that was imposed that exploited this loophole that's very famous in Los Angeles. It is what's called the ULA tax. I don't know whether you ever heard of it. It's the mansion tax. It's a huge increase in a real estate transfer tax. That tax has totally upset the Los Angeles real estate market. And it's resulted in people not closing real estate deals. That's been very controversial. So there are a lot of people in Los Angeles, particularly the business community, who are very motivated to support the Taxpayer Protection Act, because if it passes, then that ULA tax will have to be resubmitted to the voters, and it will have to get the 2/3 vote. I can guarantee you that tax will not get a 2/3 vote if it goes back to the voters, because it's proven to be so unpopular. Where taxes are headed in California? Taxes in California only go in one direction. That's straight up, because it's not just taxes. Like I said, highest income tax rate in America, highest state sales tax, highest gas tax. Remember, last year we said the highest income tax rate in America at 13.3%. And we did, but now it's 14.4%. When did we vote for this? Well, the 14.4% came from a change in the law about payroll taxes. There used to be a cap on the state disability tax. The cap was like $136,000 of income, and then you weren't taxed anything above that. They took the cap off, which now means the highest income tax rate in California is 14.4%. Nobody voted for that. It just kind of happened. And so this is the kind of shenanigans that we are trying to prevent. Howard Jarvis himself was a very tenacious individual. He wanted property tax relief in California in a very big way. What people don't realize is that he tried 6 times to get property tax relief before Proposition 13. He failed 6 times, and then in 1978 he succeeded. So number one, that's a lesson about staying with it. If you've got a goal in mind, stay with it. But one of the things that he did that really, really motivated him is that he was trying to work with the Los Angeles County assessor, who was actually on our side. The assessor wanted property tax relief as well. It's just that the assessors had to obey the law. The law said you had to tax property based on its current value. And so the assessors, all the assessors do is they value property. But the county assessor of LA was an ally of Howard Jarvis. And so Howard was visiting him one day, and as he's leaving the assessor's office, there's a public counter in the assessor's office, and there was a woman, an elderly woman in tears, saying that she can't afford her property tax bill. And the woman behind the counter was very sympathetic, saying, "I'm sorry, ma'am, I'm sorry, but this is the law. We can't do anything. This is what your bill is, and we don't have the power to lower it." And the woman was in tears. She turns around to walk out, and she drops dead of a heart attack. And Howard saw that happen. And so that's what spurred him to try it again. And when he tried it again, we got Proposition 13. And Proposition 13, even though California is much more progressive than it was back in 1978, keep in mind, this is no longer the California of Ronald Reagan or Pete Wilson or George Deukmejian. This is the California of Gavin Newsom, very progressive. And yet, Prop 13 remains about as popular as it was back in 1978. And what that means is it's not just Republicans. Homeowners, business people, irrespective of party affiliation, they like Proposition 13. They don't want it hurt, and they want it protected, and the Taxpayer Protection Act does just that.
If you haven't checked out CaliforniaInsider.com, we highly recommend you do that now, because we're going to have a lot of news and videos there. And on top of what we have there right now, we are building a really big platform to cover what's happening in California, so you can be informed. We're going to have more shows, more videos from all aspects of life in California. Go to CaliforniaInsider.com, and we'll see you there.